in your study of this so far, what do you think is the likelihood that we will fragment into trading blocks, where it'll be America? I don't know who they are, but I'm sure we'll still keep a lot of our Atlantic alliances, and maybe get even closer to Latin and South America, because that can be a source of younger workers for us, and then have the rest of the world try to rotate around the seems to be the emerging BRICS axis.
Yeah, well, I think the story is probably a little different between the different major blocks. When you look at the U.S., the obvious place to turn, which has the combination of geographic proximity, similar enough value structure and corporate structure and strong, pretty well educated labor force growth, is for the U.S. to really turn first to Mexico, which of course we've done for 25 years, but then also turn to the rest of Latin America. Mm-hmm. And I think that's really, from the U.S. perspective, I could easily see a transition here from a NAFTA block to a Western Hemisphere block being the primary economic engine, which is interesting because a lot of the talk with the BRICS is like the intersection between, say, Brazil and China. And, if anything, it seems like this shift to a less integrated world is more likely to sort of break that rather than support that relationship, given the geographic proximity, as well as, and I should emphasize, the capital flows dynamic as well. And so that also, we've talked a lot about trade and production and things like that. That is also another very important dynamic here, because when you go through a period where you're going to have to rebuild so much infrastructure, the places that are going to be able to do that most effectively are the places that have the deepest, most effective capital markets, right? Mm-hmm. And access to capital. And so, we know, the U.S. and the U.S. dollar is a huge liquid capital market with tons of skill in terms of allocating it, particularly to emerging economies, whereas other groups like China have proven certainly to struggle to some extent in doing that access to global, or providing global capital in a way that is at least economic in nature. They've been proven to be able to do it in a non-economic way through Belt and Road, but not really in an economic way that over time is gonna really pay the dividends the way that the Western and particularly U.S. capital markets have become very effective at.